Hi, welcome to Trading Without Fear. In this episode, I'm going to be going over the ABCD pattern that I traded on BTCM, kind of thought process, what I was looking at, and an overall direction of what that move did. So before we jump into the trade, what I want to do is just show you a comparison of what I've been doing for this week. And this way you can kind of understand the risk that I've been doing as far as the risk management that I've also been able to do. So just as contrast, going back in July, these two trades here was actually pretty good discipline. And again, the discipline started slipping a little bit more. And then in August, same thing, just taking much bigger losses than I was kind of anticipating. There's a few big losses on this in August as well, 55%, 42%, 93% are really unacceptable, and 47.04. Even 23.91, which was on Monday. Again, that's from two different trades. One of them was $20, which was also unacceptable. The risk on that one was just too great. So some of the things that I've been focusing on going forward was I wanted actually to find out of what pattern I've been tracking and that's been presenting itself the most often in the market. Because I'm a probabilistic trader, I want to go for the one that has the highest probability of forming and the highest probability of working out in my favor. And across all different months, from May all the way through September so far, the biggest one is actually, or the more common one is ABCD patterns and wedge patterns. Kind of lump them into the same, but there is slight variations between the two, which is why I have to typically counter for both of those. Those still ABCD patterns present themselves more often in the market. So what I've been focusing on mostly is ABCD patterns. And going forward, my focus is going to be also on ABCD patterns. Now, currently this month, I am actually down overall in the month, Hi, welcome to Trading Without Fear. So in this episode, I'll be going over the ABCD pattern trade that I took on BTCM. On BTCM on 9/3. Hi, welcome to Trading Without Fear. In this episode, I'm going to be going over the trade that I took on BTCM. It's an ABCD pattern. Before we jump into the chart, I just want to go over a little bit of stuff that I've been doing, change of behavior, and how it's actually helping me trade. So this week, I've actually taken an entire week has been a red week. Currently, I'm down like $63 and some change. My biggest loss was on the 30th, which is Monday. This trade right here, or this loss right here, was actually from two trades. One of them was a swing trade that I decided to cut, get back into the bracket order habit. So that's why that trade is a little bit bigger. In September, all my losses have been under $12. So in this game, what you want to do is have really tight risk management. The one thing that's going to be able to keep you, in the game long enough to make money is keeping risk management. The other thing that I wanted to focus on was what pattern presents itself more often in the market, and what's the probability is it working out in my favor. So through all the patterns that I trade and all the patterns that I track, the main one that shows up over and over again is ABCD pattern, which tells me that they're not only formed in the market more often, but they also have a higher probabilistic outcome of weighing in my favor. So moving forward in September, my main focus is going to be on ABCD patterns, and that was my focus today on Friday the 3rd, was trying to trade ABCD patterns. So let's go ahead and jump into the trade. So this is a BTCM. It's a former runner, had pretty heavy volume, had a nice clean breakout over that $10 range. My thought process on this was if it can actually hold above key levels and form support, it may actually continue going on. You can see here I put it on the 1-year 1-day chart, and there is currently resistance right at this level. So my thought process is that it may actually try to run another day, hit that level, and stop, maybe even just go slightly above that. So I was looking at 20% profit, 5% risk. Now, because of gambler's fallacy, what that basically means is your brain has a tendency to actually associate past events with current situations. So because I've actually taken 5 trades and lost all 5 trades in a row, I'm already thinking that this trade may not work, which is kind of a bad scenario to go into a trade with fear. But I ended up taking this trade anyways. There's a few other ABCD patterns, but I really like this one. It had nice clean volume, was actually uptrending, second day over a breakout level, like I said, and potential to actually push up more. I was also looking at this one because Bitcoin, I think this is a Bitcoin type of a company. Bitcoin today is over the $50,000 mark, so I think there's a potential that this one can keep running alongside Bitcoin as long as Bitcoin stays above that $50,000 during the trading day. I really don't know what the float is on this one. I also don't know what the short percentage is, or if there's any news. I don't trade any in the news or any of that information. I basically get everything off the chart and price action. So the blue line right here is VWAP. The yellow and kind of pinkish purple one, that's just also VWAP. I don't know if those do. I just basically look at this blue line. So what I ended up doing is buy it on there. You can see there's a nice clean uptrend. So after market open, kind of had a small dip, ramped up, pulled back, consolidated for a little while, ramped up again, pulled back, consolidated right at that level, which means that should act as support at this point. Pulled back, made another higher low. So that's when I entered into the trade right here at 1397. My risk is down here. Now, over time of me analyzing this chart, I do think that this risk level down here is a little bit too high, even though it's only a 5%. I do think that if it starts to go below this level right here, that there's a better chance of it actually failing on the day. So what I'm debating right now is actually increasing my risk up. I'm planning on moving my risk up on it. So what I'm also doing at this point is writing down my trading workbook, making sure I'm notating any thoughts or feelings that could influence my trade, making sure that I'm notating all that. And that way, later on in the week, I can actually go back and review my trading workbook, see if there's any behaviors or habits that I need to actually correct. Even though I've actually had a losing week this week, $63 and some change down, it's not actually the end of the world. I'm pretty confident that if I keep trading ABCD patterns starting next week, it's going to be a short week next week for you guys in the US or pretty much anywhere else. Monday is actually a holiday, so the next trading week is Tuesday through Friday. So I keep in mind that it's going to be a long weekend for traders. And as long as this level's right here holding, I'm okay holding on to this trade as well. Now, the reason why I've been aiming for a 20% price target on pretty much every trade I'm taking is I do aim for a little bit higher probabilities. Some traders will actually go for smaller, quicker gains, 3, 5, 4%, even 7%, 10%, whatever the case is. What I'd like to do is try to take as much of the move as I possibly can, with as little risk as I can. Now, some of the other ABCD patterns that was working on the day were SHLDQ and MTRT and KPLT. They all formed nice clean ABCD patterns. Now, my account was a little bit larger because this is a small account challenge. I would have actually taken all 4 of those trades and just let the probabilities work. Any of the listed trades, I would have actually aimed for the 20%. Anything that's OTC, I'll be aiming for 40% at this point until new data comes in. And so what I'm also doing right now is just adding the trade to my tracker, making sure that I'm actually tracking all the information I need to. And so right here is starting to kind of making that a lower high and starting to squeeze above that 14. It does actually have to get above this level right here and hold that level. So what I'm looking for is a lot more volume to come in, push it above that. I think that's currently like 14, 20, something like that. If we can get above that level, there's a good chance that we can actually squeeze up further on the day. So at this point, I'm really looking at this risk level, determining whether or not I do want to take that 5% risk, or if I actually want to higher it up and make it a little bit closer to this area right here. So we start to get a little bit of push, but I'm notating this volume bar down here. Doesn't seem like it's enough volume to actually push it up any further. So that level right here seems to be acting as a resistance. And we get a big red candle. Looks like the sellers are currently in control of this chart. At this point, I'm starting to, think this trade may actually end up being a loser, especially with that big downwards push right there. It does look like it's trying to pull the VWAP, so it is still uptrending based off that trend line right there. Now the trend line that I have is more of a guide, just stating, as long as it's starting to follow, higher lows. This one right here may actually be the higher low compared to this low and compared to this low. So I'm just still watching it. Still kind of nervous around this VWAP level. Don't really know if it's going to be able to, push through that any further than what it currently is. And if you see here on the level twos, you'll see that the ask is only 1 to 4 shares. There's some big bids coming in. So if you're actually using level twos as a guide to actually determine what direction the trade is going to go, it's really hard to actually determine that, not only in listed stocks, but also in OTCs, which is why I don't really put too much emphasis on level twos. Everything I trade off of is right up here. I don't need to know what the people are going to do when they come into the trade because I know the level twos are actually manipulated. So it is a good tool to actually use for entry and exits. Now this right here is sped up by 300 times. So you're looking at about an hour's worth of trade price action in about 16 and a half minutes. If you do like this content, subscribe to the channel, leave a comment below. How was your end of the week of the first week of September? Did you finish on the week green or did you finish on the week red? What was the biggest takeaways that you learned from September, the first week? And so you can see here, I do actually move up my stop loss just below this. So I'm now risking off of this level right here. I could have actually brought it up a little bit closer to this these candles right here, but I determined that this area right here may act as support. So what I want to do is just go slightly below that. So we're starting to get into a push up to the 14s, and this right here is my current P&L in the day, and this is my share size. So you can see here is the bracket order that I have. I set it up for 5% max loss with 20% max percent target, and now going back and looking at this, it looks like I may have actually set this up incorrectly. I may have to fix that a little bit later on. So it looks like the price target I should be looking for is around the 1677 would be the 20%, which it should be about right here. So I do think this area right here is a little bit set up incorrectly, which is a good thing I noticed that now, so I can actually fix it later on, so that way my price targets are accurate. But it does look like it actually breaks through the 1420s, gets up to the 1440s almost, and pulls right back. At that point, I was up around $5-6, so not a whole lot. And it looks like it's starting to become weak again. It's now fell underneath that support level or the resistance level. And if this trade was going to be working out, it should actually be breaking out over that is not going to work out. The volume is, it's very inconsistent. There's a big pushes. This big volume candle is right here. It failed to rapidly break out and continue pushing up on that candle. If it was going to push up, right there would have been the best time to do it as. As the day starts to go on further, you're going to start to lose volatility, especially these ABCD patterns. They do have a higher chance of actually failing as the day goes on. Now, as long as it's actually holding the ABCD pattern and it's starting to, kind of curl up and make higher lows, higher lows, higher lows, or just staying within that channel, there's a good chance that it may actually pop later on in the afternoon. But with the volatility on this one, around the $23,000, $23 to 23 million, at this point, it's pretty close to the previous day's volume. Now, at some point, I'm actually going to be comparing the volume there to see if we're actually matching or that volume. And you can see the volume bars down here. We're pretty close to what it was yesterday. So in order for this to actually push out even further, it has to exceed the volume that it was before. The volume has to be on the upside, not on the downside. And so as we start to go through VWAP again, I'm getting a little bit more convinced that this trade is not going to work out. Now, one of the reasons why I'm not actually just exiting the trade and cut my losses to much smaller is I've actually been in trades where, it's kind of consolidated. What it ends up doing is later on spiking and going on. So I don't want to actually exit the trade out of fear, because I'm fearful that the trade is going to, make me lose money on the day. I'd rather just leave my stop losses there, let the trade work out. As long as it's in between my bracket orders, I'm okay just staying in the trade. So now, if you're looking at this from a technical standpoint, the trend was actually uptrending right now. It's kind of broken through trend. So it does have to get back above this yellow bar in order for the trend to continue on. But it is actually starting to make some lower highs, some lower lows, sorry. So it's starting to make some lower lows. So, given this chart and the type of pattern that I trade, I'm pretty familiar with ABCD patterns. I'm not terribly confident this is actually going to work out in my favor. But instead of actually reacting out of fear, I do want to let the trade work. And I did actually notate this in my trading workbook, stating that I'm a little bit fearful about the trade not working. At this point, I also never had any desire to pull my stops or to remove my risk or anything like that, which is a pretty common mistake that I have made in the past, where I'm fearful the trade's not going to work or may work later on. What I end up doing is pull my stops. As a mechanical trader, what I need to do is just allow the trade to work out, and whatever happens, happens. I'm also starting to recognize the only reason why I know that, or one of the reasons why I feel that this trade's not going to work out, is again because I've taken prior to this 4 trades in a row, and all 4 trades were actually losing trades in a week. So I'm thinking that I'm only associating the previous trades to the current trade, and associating the losses from those trades to this one. And ultimately, am I going to be accepting the cost of the trade, which the cost of the trade is actually where I put my risk. And I do believe that, accepting the cost of the trade is a really big part of trading, where you need to be able to be completely at peace with whatever outcome happens. So right there, I did get stopped out. Looks like this trade is going to fail. So I just didn't have enough volume to come in to push it up any further. I was actually really accurate on putting my risk where I did. So if you do take anything away from these videos is risk management. The only way that you're going to be able to stay in the trade a lot longer or staying trading a lot longer, is to actually have proper risk management. And so that's it for this video. I hope you like that.